Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, June 25th, 2013. Well, a change of trend today and a candle that's made a higher high and a higher low. A white-bodied candle denoting the buyers making an amount of net bullish progress on the day between the open and the close, as opposed to the sellers for the previous day's trading. So a shift in momentum back to the buyers for today's trading. That means that the buyers are supporting this change of trend to a degree. The only problem here is that the buyers, well, not a problem, but the buyers have taken control, but they did lose some commitment as they were trading up around the highs. And the end result is that the market has closed between the high and the midpoint level, and it means that the buyers have a moderately strong amount of control, and if they could have closed up towards the high, it would have been strong control and perhaps would have given the buyers enough momentum for a decent assault on the round number 1600. With some weakness coming into this candle today, it doesn't give a lot of confidence in the market breaking through this 1600 barrier. It seems as though this trend may continue to the upside, but I suggest that we will see some weakness coming into this market around the 1600 level, and we do also have the bottom of the cloud trading around that area as well, and that will be very, very solid resistance to this market. A likely scenario would be that the market appreciates up to those levels. We see sellers coming back in, and the market then tests back down to this 1576 level. Now, for today's trading, the 1576 level is held as the low, and that will be very, very important support for this market moving forward. And if we do see a bearish close down below there, we could quickly see the market testing down to the 1555 level. Now, in terms of the Fibonacci extension, we're examining the relationship of this new first time frame uptrend to the previous time the market was trending up, and here today we've seen the market testing above the 61.8% level, closing just at the 61.8% level. It does give us a bit of a hint that there is a possibility of a change of trend, but the fact here is that the sellers aren't supporting the market at the moment. So even though there is some doubt about this price rejection that we saw here as the market was trading up around its highs, the buyers are still the strongest party in this market, and it's likely that the rally will continue. We do need to watch the 78.6%, but probably the area around the 100%, just above the 1600 level at 1606, will more likely be more important to this market. In terms of the Fibonacci retracement, here we've seen the market test to the 38.2% level, and that's roughly around the area where we saw the price rejection come into this market. So a hint once again that there could be a change of trend and a swing back to the sellers, but certainly not a lot of support for that at the moment. In terms of patterns that were in play in this market, and prior to this substantial price depreciation that we saw a symmetrical triangle and a breakout down below. It was a reversal pattern. The target was met. The target was the width of the pattern projected down from the breakout, and we did eventually meet that over the last few days, but in that first time frame downtrend that the market was in after the breakout, it failed to meet it and then appreciate it. We then saw the market move into this wedge type pattern, not a perfect wedge, it is quite large in range to be a nice wedge pattern, but it is similar to a wedge, and it was a congestion area with the peaks and troughs converging. We saw the confirmation of the pattern with the close down below the bottom barrier, and our target here is the trend leading into the pattern projected down from the breakout, and that is not a conservative target that we have here. It's a little bit more less conservative, and target is down around the 1529 level, but there is a possibility here of the target being met now that we're trading down below the cloud. A likely scenario here is that we see the market rally up to around the bottom of the cloud, or around or just through the 1600 level, and then the sellers to come back into this market, and there is a possibility of the target being met. Time frame is not really clear. The market may not meet that time frame all in one go. It could take some time before the target's met, if it is at all. But with the market now being bearish and trading below the cloud, there is a good possibility of that target being met. Now, in terms of Ichimoku, obviously a bearish market in all three timeframes. The market's trading below the cloud still, so we have a bearish market in the long-term timeframe, and also bearish in the medium and fast-term timeframes. We're trading below the Kijun-sen, the pink line, and the Tenkan-sen, the green line, and the Chikou span here is below the corresponding price action. So it's confirming the negativity that we're seeing in this market. Interestingly, the Kijun-sen, the pink line, is pointing flat. Price action is being attracted back towards there. There is a possibility that price action will continue to be attracted back towards there. Likely scenario is we're attracted back towards the 1600 level. We find resistance roughly around there, and then we see the sellers come back in line with the trend in all three time frames. Then crucial to this market would be the 1576 level support, and then the 1555 level. But at the moment the trend is up. The buyers have control, not strong control, but momentum has swung back to the buyers. A likelihood we could see a one candle continuation of the trend, and then watch for the sellers to come back in.